Well, good day all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Wednesday, the 28th of December, 2022, getting on at 6:30 p.m. Central Time. So, trying to make something out of nothing is going to be hard. The Santa Claus rally, even if he shows he's not welcome now. It's that simple. There's an event that's been happening each day. I don't know if you've watched, but starting on Monday when we weren't open, it was actually Tuesday, take that back. Starting on Tuesday, the market tried to rally. Didn't go anywhere. It got thrown back again. Today, you were up big time at one point in the markets. Gave everything back and then cratered. So what's going on, I think, is that there's plenty of losses for people to take this year in their stock portfolios and use it as a carry forward loss against gains they'll make or have made in prior years. And I think that's what's going on. So I think, we get to that point at some point each year. We've had so many bull years recently that people forget that. But in losing years, this is where that is a feature. And I think that is the feature that we're dealing with. When you look at Tesla, a whopping rally. After 7 days of declines, it was up 3%. And Elon Musk did right, and he told his company employees, don't pay attention to the stock market. Okay, what's he going to say? Pay attention, quit your job, and run from me? Okay, but you can see the pressure is on the company. The pressure is on him. He didn't have to do Twitter. Whether Twitter was the cause of this, who knows? Nobody knows. You know that. Everybody guesses. They'll say, oh, well, he shouldn't have. He had to sell all those billions worth of this. Folks, at some point, this was an overvalued stock. Apple has been overvalued. I know people don't believe me on that, but that's what I've said. Today's story at the end of the day on CNBC was, which one of the two would you rather own for 2022, Apple or this? Then they went into the PEs and they were talking. So, these are the games you do at the end of the year. But I think you'd agree you're in a downtrend. The market has fallen apart. The setup has been bearish for a long time. Once the 18-day average here got underneath the 100-day average, you had the short-term, medium, and long-term. The bear play was set into motion. Just take a look. That was called a bearish crossover. Game over. Until you get back over these numbers, you've changed the whole nature of the market. Did I know this was going to come? I'd be the richest man in the world if I knew that was going to come. But as a chartist, what I knew is you were in a bear market. That's what it's about. It doesn't matter that, in a bear market, you may not go down much. You may go down a heck of a lot. This is down 70%. So you're getting a pretty big break out of it. You can see how the Bollinger Bands, not doing you any good. This is called a gorilla glue trade. For those of you new, let me explain that. There are times when a market will latch on a Bollinger Band and ride it. Only 5% of the time will the market stay above a Bollinger Band or below it. But it can sit on the band, upside or downside, and push a trend. Well, the strongest glue most of us can buy together is Gorilla Glue in a store, right? So if that's the case, maybe Flex Glue stronger, I don't know now. But as it goes down and it latches on, people often, and I used to go, oh, it's oversold, it's going to bounce. That was how you break your account. Downtrend, it latches on, you don't know how far it can go. But if it starts with a furor taking to the downside, watch out, and that's what you've done. It often results in an embedded reading. From an embedded reading, you'll know the bounce is coming when the red line closes back over 21. Until then, good rallies will be sold by the traders, still looking to see, can you go for these lows or a window envelope? I never show the window envelopes here. There'll be too many lines on the chart during my subscriber videos, and they are so important. When we look at the lithium and battery ETF LIT, same thing. Here's your trade. This is what I'm talking about, just so that you get a feel about it. Here's how you lift away from the market. This is the sell numbers because you're embedded. The trade's looking to get short this, and bing, right back. That's often what happens. And then if it goes back to the Bollinger Band, it locks on again and that Gorilla Glue takes hold. If the market, by the way, if that chart now goes up tomorrow, you're broken maybe the Gorilla Glue parade trade, and it's time to be coming out of the market. You've probably used most of the downside. It's the way you look at it. There's an art to this, and I try to present it as best as I can. In Apple, you got onto the same thing. Basically, here was your Gorilla Glue. You stepped away one time and you went right back down to the numbers. All right? Were you embedded? You tell me. You know what it is already. Disney, down and out. I mean, down another 2.5%. What's going to rescue the company? I don't know. You know, the Avatar, what did it do? $56 million for the week. And it could have been better. It ran into the storms. It probably could have been an $80 million week. It's a shame, but you know, other people will go and it'll have some legs to it. I know I want to go see it over the weekend, so hey, they'll wait for my money then. Maybe they'll give me a discount. But as you can see, 82.66 next target, embedded, I'm bearish. Until you lose the embedded reading, I don't want to hear, oh, pick a bottom. Oh, no. Pick a top. Yeah. And then if it loses the reading, out you go. Here you lost the reading. So I said you probably make a run to the closest moving average. It was the 200-day, not the 18. Okay. XLI never did embed, just oversold. The resistance point is right here, the 18-day average. Why? You will hear me call this red line over and over and over throughout the course of the year. The line in the sand. It is the DMZ zone between North and South Korea. It is the neutral number. Markets like to go there. Markets that get above it like to come back, test it out. What are they going to do from that? That's where the market makes its mind up as to what to do. XSD, you don't see it locked in on that lower Bollinger Band. There's that Gorilla Glue trade, and it's forcing the market to embed, which it starts feeding on itself until that red line closes over 21. In the home builders, I was listening today to some interviews as to one of the big home builder followers. I think he's got the best record in the industry on him, and he is friendly, the home builders, for next year. So it's a matter of timing, he said, but he is friendly. He gave all his reasons why. We'll see what happens. The chart action is bearish right now. Obviously, the Fed's going to raise interest rates in February, maybe the meeting after that. Traders will start talking right off the bat, oh, it's only going to be 25 basis points. How do you know that? Tell me how you know that, okay? So far, all the numbers that have come out say that the labor market's so strong that it's got to get the Fed irritated. They got to go after it, all right? And to go after it, you don't go to 25 points, you go to 50 points. So we'll see. That's what I would think. In the energy sector, you got overbought. We mentioned this just yesterday. Here you got overbought. This was Tuesday's action. Here you are today pulling back, and this is, just about where you're sitting. Not much going on there. In the gold market, I'm looking to see if the trade will step in and support it between 166.98. That's where I think they're going to buy the market. I think they'll bail if you get under 166.06. And if they buy it there and they can hold, I think they'll look to see if they can get it back to 169.64, the upper Bollinger Band again. In SLV, too overbought. When markets get overbought, I think traders walk away from them, especially putting on new positions or especially looking to add to positions. I don't see that. Copper market's now waffling, but it should. What did the Bollinger Bands do? Do you see how they've narrowed in dramatically here? Look at that. And that's what typically happens. When that occurs, the market starts coiling. And it'll go back and forth in that. I don't think it's ready to break out to the upside or the downside. I think it's going to spin and take money away from people now. In TLT, is this the beginning of that Gorilla Glue trade where you lock on here? It's doing the same thing in BND, by the way. And in the dollar index, trying to get a bounce out of an oversold condition. I can make the argument that you get between the 18 and the 200-day average. Obviously, the 18 will be the hard one to get through, but I can make that argument. the market goes into a failure mode if today's low is taken out. If you've taken my outside day course, here's your outside day. You know what I taught you in it. It's right there in front of you. So you put it all together, you try to come up with ideas. Today, in the future side of things, I was trying to put on trades. In the SPDR ETF, I had put out a bunch of trades. None got filled today. And now I don't know that I want to do too much for the morning. But do I use this formula all the time? What is it? Well, it's a formula that you use of the previous day's bar. All right. Now, bar could be the previous day. If you're on a 15-minute chart, and I use this on 15-minute charts, not daily charts, by the way, I'm always looking at the other bar. And you formulate from it with the range. The formula comes in, and you're looking for sell points, which are in red, buy points in blue, and going back to the neutral point, the white. It's part of the way that I even teach how to use moving averages. Part of this all came together with that over many, many years of my keeping up with the markets. I learned this from, I think, one of the best people that ever taught it. Can't use his name, not going to use his name. I don't have permission to do so. But he used to manage money through my account. I never saw anybody manage so much money. He did a very, very good job. But at that point in the 70s and 80s, the problem was he got bigger than the market. That's just what can happen. Today's markets, you can even do that. You got to be careful. You can take on positions that get bigger than the market can handle. But as I said, this is an interesting technique. At least owe it to yourself to learn it. It's free. 3 videos. I teach you how to use this. You have it, by the way, in your charting software, most likely, and how to use it with momentum. Just go to our website under free offers or move your cursor up here and that'll take care of it. I'm Ira Epstein. You have yourself a great evening. I'll see you all tomorrow.